Yes, now it's being recorded.
Please confirm if you can see my screen. All right, thank you. So I'm sorry I sound a little bit down. I'm quite tired and the network really stressed me. Okay, the last class we started capital allowance. Now, before I continue, I think I would like to ask if most of us were in the class because I knew a lot of people were complaining about being tired and everything. You can't see my screen. If others can see it and you cannot see my screen, it means your network is not good. So you have to check your network. So my question is my network, but I'm presenting my screen now. Is it everybody that cannot see my screen?
I can see your screen.
I'm telling the person that is the person network. I'm not saying it's your own.
Okay, okay, all right. Sorry for that. I misunderstood. All right. So I hope the network gets better. Even me is telling me here that my network is unstable. Don't know what to do. Glow has been stressing me since, honestly. Okay, so my question is, should we start capital allowance from beginning? But I'm not going to like dwell on it like I did the last time. It's going to be briefly till we get to where we stopped in the last class. And we are moving closer to calculation aspects. So should we just brief through or we should continue from where we stopped? Because I know a lot of people were complaining about being tired in the last class, and I don't want to. We cannot continue if you guys understand what we've said before. Awa, you want to say something?
Yes, please.
I was
Good evening.
thinking maybe we should do illustration or we should continue. Maybe if we continue with the illustration, we understand it more better.
Good evening, ma'am. Please, it will be better if you can just brush it up for us. Someone like us are just joining for the first time.
All right, no problem. We'll see what we can do about that. Okay. All right. Um. So we're just going to brush up a little bit. We didn't really go far, right? Because this is where we stopped, and um. All right, let's continue. So now we moved from basis of assessment to capital allowance. And please, at the end of the class, kindly remind me, everybody, everybody should please mute their mic. Who is Ekale o? Ẹ bá wa mute mic yín o. Thank you. So we were talking about capital allowance, and I said capital allowance is a replacement for depreciation because depreciation is a disallowed expenditure for what? For companies. Depreciation is a disallowable expenses, and this is because companies use depreciation for tax planning to reduce their tax liability. They employ methods of depreciation that favors them and reduces their profit. Because of this, the tax authority decided to disallow depreciation and bring their own form of depreciation, which is capital allowance. So now we have different types of capital allowance. The first one is initial allowance, right? So for initial allowance, it's just like the name connotes, it is initial. It is granted in the first year of what? Of acquisition of the assets. So now you just got an asset, right? In that year of purchase, you are going to be getting what? An initial allowance. So the asset can be new and it can be second hand. Both second hand assets and new assets get initial allowance except for building. Second hand building don't get initial allowance. It's only second hand building that does not get initial allowance. And no matter the number of months in your basis period, you get your initial allowance in full. It means that even if your basis period is not up to a year, they are still going to grant you everything that you have as initial allowance. They are not prorating, they are not removing anything. Your initial allowance will be granted to you completely. So for annual allowance, just like the name connotes, is granted annually every year. So it means that after removing the initial allowance that you get from an asset, from the cost of that particular asset, the remaining residual value we prorate annual allowance. Is prorated using the number of months in the basis period. So it means that if your basis period is not up to a year, you are going to prorate the annual allowance to the number of months included in your base period. So now annual allowance has three formulas. The first one, I would like to talk about this one that my cursor, the one I just highlighted first. Because we have rates for annual allowance and initial allowance, right? And this is just a simple formula. Cost minus initial allowance multiplied by the annual allowance percentage will give your annual allowance figure straight up. But sometimes you might want to use the economic useful life. EUL is economic useful life of the asset. And you get this by dividing 100 by what your annual allowance percentage. Let me open my Excel. So now economic useful life is gotten by dividing the 100 by the annual allowance. So let's take for example motto annual allowance percentage is let's say 20%. So for you to not know the economic useful life of motor car, economic useful life for motor is now going to be 100% divided by 20%, and that will give you what? That's 5 years. I hope we are good. So that's it for economic useful life. So instead of multiplying by your annual allowance percentage, then you divide the residual amount after removing your initial allowance from your cost. You divide it by your economic useful life. That's the second formula, which is this one that is here. This one. But then now talk about the third formula. This third formula says tax written down value divided by the remaining economic useful life. We use this particular formula when the question did not give us the cost of the asset. It means that the question that you are dealing with did not talk about when they bought the assets, or it might even talk about when they bought the asset, but did not give you the amount at which they bought the asset. So if you don't know your cost, these two formulas that are up are useless because you don't even know the cost that you don't know the cost. And since you don't know the cost, you cannot calculate initial allowance. That means you cannot use the two formulas that are there, right? So now this tax written down value, let me go back to my Excel. Tax written down value, let me write it in full. Tax written down value is the same thing as our residual value or carrying amount that we know in accounting. So tax written down value is equal to what? Tax written down value is simply equals to cost minus initial allowance minus annual allowance, if any. So what we are trying to say here is, I think this is for skills, right? You guys are skills, so is here we're talking about capital allowance. Okay, so we're talking about tax written down value. So the reason I put if any in annual allowance is because the year that you are talking about might be, let's say, the second year, or the it cannot be first year and you have tax that value actually. So if any does not actually cut, let me remove the if any. Tax that value. So it means that for the first year, you have your costs, you have your initial allowance, you have annual allowance. When you now remove the initial allowance and annual allowance of the first year from the cost, what you now have is tax down value, tax down value. So in the second year now, there will be no cost, rather there will be tax down value brought forward. I hope we are good. So now, to not know your annual allowance in these cases that you don't have your costs, your formula will now be tax written down value minus divided by the remaining economic useful life. Remaining economic useful life, remaining economic useful life is simply equals to the what? Economic useful life, EUL, minus the used life of the asset. So what we are trying to say here is that if your asset have used 2 years and the economic useful life is 5 years, like the example that we have here, your remaining economic useful life will simply become what? 5 minus 2. I don't know if you guess me. That will be equal to 5 minus 2. Enter. Your economic useful life is going to be 3 years. I hope we get that. So to not get your annual allowance there, you will divide your tax written down value by the remaining economic useful life to get your what? Annual allowance. And if you have questions, just put it down. Either you write it in the chat box or you wait till I come back to Google Meet and we discuss together, please. Do you get? So for now, let me finish talking about the types of capital allowance. They will come around for questions later. So now let's talk about the balancing adjustment allowance. So this balancing adjustment occurs when we sell our assets. When we sell our assets, we either make profit or we make loss. So when we make loss, it becomes an allowance for us. It means that our capital allowance will increase. Our capital allowance will increase because we have made a loss and the government wants to relieve us for on that loss. So this occurs when our tax written down value is lower, is higher than our sales proceeds. Is lower than what the asset is worth. Let's take an example. We are talking about what? Balancing allowance. So now, example, motor tax written down value is, let's say, 500,000, right? Then you sell it. It is sold for 350,000. Balancing allowance then equal to 500,000 minus 350,000, which is equal to what? 150,000. It means your 150,000 is going to be added to your capital allowance. That is a loss. But when we're talking about balancing charge, it connotes a profit. And remember, when you make a profit, the government will tax you on a profit. So balancing allowance connotes additional tax. Sorry, balancing charge connotes additional tax, while balancing allowance connotes additional allowance. When we have additional allowance, balancing charge. When we have additional tax, balancing, oh God, why am I making things together? When we have additional allowance, balancing allowance. When we have additional tax, balancing charge, right? I call it additional tax, right? So balancing charge occurs when there's a profit. Balancing charge. So we are saying that motor tax written down value is, let's stick with 500,000. But then you sold, sales proceed is how much? 800,000. I don't know the person that bought 500,000 motor from you, 800,000. You shall sold it 800,000. So now balancing charge Balancing charge now is equal to the profit, which is 800,000 minus 500,000, which is equal to 300,000. I hope we are good. So you had balancing charge to your what? To your profits that you are going to tax. Why you had balancing allowance to your what? Capital allowance. When we get to a company income tax, you understand better how to, when we talk about the formats, balancing allowance and balancing charge will be there, and you understand much more better on how to incorporate it in your income tax schedule. So yeah, so that's all about types of capital allowance. Before I move on, let me quickly take questions if there are questions. So, any question, guys? Do you understand what I've been teaching? I hope you guys can hear me, Sha.
Yes, we can hear.
All right, so I guess you have no question. Let's carry on then. So we have qualifying capital expenditure, and these are expenditure that are incurred on assets used for a business or trade that qualifies for capital allowance in a basis period. So the reason why I bolded trade or business here is because it is important that these assets that you spend your money on is used for your business. Capital allowance is only granted on assets used for the business. We are still going to talk about the conditions for granting capital allowance, right? We're still going to talk about that. But you should put it in mind that it has to be rarely for the business. When I say rarely, let me put it here. Rarely connotes wholly, wholly, reasonably, exclusively, and necessarily. For what? For the business or for tax purpose. We use renly a lot. So you might want to know what renly means. If I say the word renly, this is what I am trying to what to say. So now, what are the expenditures that qualify for capital allowance? We have plant, machinery, fixtures, building of permanent nature, mine or wells, plantation, research and development, agricultural plants, public transportation, development or acquisition of such software, and so on and so forth. So an expenditure that is an allowable deduction in computing the profit of a company's trade and disallowable expenditure. If a particular expenditure is an allowable expenditure under the computation of company income tax, such an expenditure can never be a qualifying asset for capital allowance. It's just like under company income tax, capital expenditure is disallowed because it's going to enjoy capital allowance. So any expenditure that you are going to deduct from your profit as expenses can never enjoy capital allowance. That's what we are trying to say here. As long as it's an expenditure that you remove, let me stop using the word expenditure. Expenses. I think that one will be more understandable and relatable. As long as it is an expenses that you remove in your company's profit, it is not an asset. An asset cannot be an expenses to be removable in your company's profit. Do you get? That's what this one is saying. So don't go and treat expenses as assets, and don't go and treat assets as expenses. That's what we are saying here. Then this note, I've already talked about it before. When a building is purchased, the relevant interest to the company making the purchase is the original cost of complete constructing the building or the price paid for it, whichever is lower. Before I continue, let me explain this. So what the tax authority is trying to tell you here is that don't be stupid, you. If a building is worth 500,000 and you paid 800,000 for it, is your loss. The tax authority will only recognize that 500,000 naira that the building is worth. That's why we are saying whichever is lower, the cost of constructing the building or the price paid for it. Now, If the cost of the building or the value of the building is 500,000 naira and you bought it for 300,000 naira, the price that you're going to write in your capital allowance is 300,000 naira and not 500,000 naira. Remember, whichever is lower. Though I've never seen a question that's like bring this condition, but it's safer to know it, right? So now, if the building is second hand, no initial allowance is to be claimed by the purchaser. Remember, I already spoke this when I talked about this when we were talking about initial allowance. Second hand building is not supposed to claim initial allowance, but annual allowance can be claimed based on what the relevant interest above. This relevant interest above is this cost that we're talking about too. So you claim annual allowance if you went for the cost of the building. Annual allowance is claimed on the cost. If you went for the price paid for the building, annual allowance is claimed on the price of the building. All are good. So is somebody talking? I'm coming, please. Conditions for granting capital allowance now. Somebody is raising up her hand. Precious, is that you? Yeah, speak.
Yes,
Oh,
yes, ma. Good evening, ma. Please, I don't really understand the part
you
of
can
that.
unmute, Precious.
Okay, I'm talking now. Good evening, ma. Hello. Good evening, ma. Hello, can you hear me?
Good
Hello,
evening.
Can you hear me? Can you hear me? Hello.
Yeah, I can hear you. I can hear you now.
Okay, okay. Please, ma. The
I
aspects
can
of
hear you now.
the aspects of the expenses, I don't really understand what your explanation there. Please, can you throw more light, please? Hello.
All right, all right. I'm coming, please. All right, sorry, I'm back. Okay, so you said you did not understand the expenditure aspect that I explained. So what we're trying to say is that any item of expenses that will show in your company income tax as an expense, it means that, let's say, for example, you bought data or you bought, should I say, stapler or pin, office pin. Those things are expenses that you remove from your company's profits, and they don't form as a capital allowance expenditure. Capital allowance expenditure would always be disallowed in your company income tax computation because they are capital expenses. And expenses that are disallowed include what? Capital expenditure. I don't know if I'm being explanatory enough. But what we
Yes,
are trying to say is that any amount that you remove from your expenses, from your company's profit, is not supposed to serve as an asset. I don't know if you get. It's not supposed
yes.
to, and it's only asset that we do capital allowance for.
Oh,
All right.
okay.
So if you've gotten that, let's move to our condition. Okay. Conditions for granting capital allowance. Number one, the taxpayer must own the asset and use it readily for trade or business by the basis period end. So what we're trying to say is that by the end of the basis period, that particular asset must be owned by the taxpayer. That is, the company must own that asset. And it is for the business, it's not for personal use. The assets must be for the business and not for personal use. That's number one. I hope you all understand. So, allowances that are applied against accessible profit of the tax year. This one is trying to tell us that you cannot remove capital allowance from loss. It's only when there is profit that you can deduct or absorb or claim. Yes, I think claim is the right word. Or that you can claim capital allowance. Unutilized capital allowance can be carried forward indefinitely, except in cases of permanent cessation of business. So It means that this year now, let's assume that the company made a loss and they could not absorb or claim their capital allowance. They can claim this capital allowance next year. So now let's now say next year they made profit, but the profit that they made is not enough to claim capital allowance. We are still going to talk about the restriction because you cannot have profit and use everything to claim capital allowance. There's a restriction, right? So let's say that the restriction is what you use. It means that you are going to have capital allowance carried down again. You still carry it forward to the next year. So you can carry it forward as much as possible, no limitation. But when you cease business, remember that a business that have ceased is no longer operating. And a business that is no longer operating is not expected to bring profits because where will the profit come from? Do you get? But in this case now that the business have ceased, what you now do is to carry back, it's called carry back capital allowance, is to carry back capital allowance for 5 years. That is, if the business should cease in 2025, you now carry back your own relief or unutilized capital allowance to 5 years. You go and relieve from 2024, you relieve from 2023, you relieve from 2022, you relieve from 2021, and you relieve from 2020. If you now have any capital allowance left after 2020, law, you cannot relieve it again. So the question will now be, what about the taxes that you've now paid on this profit for those 5 years? The tax authority are to refund you that particular tax that you have paid. I hope we are good. So now, for you to enjoy capital allowance, a formal claim must be made, except when the revenue service deem it reasonable to grant relief. So we are saying that capital allowance is not automatic. You need to what? Claim it. You need to claim it formally. So the amount of capital allowance calculated is generally restricted to a particular percentage, that is 66/3 of accessible profits. Any company, agro-allied industry or manufacturing industry is not affected by this restriction. So now I tell you that you cannot use all your profits to carry capital allowance. So if not, tax authority will not say anything to tax. So what they now did is to restrict what? Your capital allowance that is the highest capital allowance that you can remove from your profits. The highest is 66/3% of your accessible profits. And I forgot something. I just remembered now. Please let us go back to our balancing charge. Under balancing charge, I forgot to talk about this. The maximum amount payable should not exceed the total capital allowances claimable on the asset before disposal of the capital expenditure. Please, let's go to our Excel. If not, you might not understand this. When we spoke about balancing charge, no, we talked about the tax written down value of this motor vehicle. Now, let us assume that the cost of the motor vehicle, the costs of motor vehicle, of motor is, let me see, 700,000. Now, if you now notice this, the cost that you bought it originally is 700K. When you sold it, tax rated down value is 500,000. Then you now sold it 800K. Now, the difference between the cost and the tax rated down value, cost minus tax rated down value, will give you what? Total capital allowance that has been claimed on the motor, right? And that will be what? This is going to give us 700,000 minus 500,000. We have 200,000. It means that the total capital allowance that the company have claimed before they decide to sell the asset is 200,000. But when you now sold the asset, maybe you saw one Oyinbo that don't know what he's doing, and it's Abi Oyinbo that saw vintage car and decide to buy from you. You got a profit of 300,000. The tax authority cannot tax all of these 300,000. The balancing charge will now be restricted to 200,000, which is the total capital allowance that has been previously claimed on the motor car. I hope we are good. Did you understand what I just explained? Thank you. Wow. I guess you understand. Please, if you don't understand, just stop, because I've seen a question. I just don't know whether it's advanced as I'll be this one that use this ruling. Even me, I fell into the trap.
Ma,
Okay.
please, can
So
you
we are good.
explain?
Thank you very much. Let's continue our conditions. I've talked about
Hello.
Esther, you want me to explain it again?
Yes,
Yes, ma'am.
can you
Yes,
explain it?
ma'am. I will explain it again.
All right. Let me explain. Okay. So what I'm saying is that the profit that you make as your balancing charge must not exceed the total capital allowance that you have claimed on that asset before. So now, using our example, the cost of this car is 700,000. That is the amount at which you bought it for the business. Now, you want to sell it. As at when you want to sell it, the tax rated down value is 500,000, which means that you have claimed capital allowance of what? 200,000 on the asset before. Then you are lucky enough to sell it 800,000, which means you have seen what? Profit. Balancing charge here is what? Profit, right? Profit of 300,000 on the asset. It means that normal, your balancing charge is supposed to be 300,000 because that is the profit. But the rule says that that profit that the government will tax must not pass the amount of capital allowance that they have granted you on the assets before, which is why in this case, we are not taxing 300,000. We are restricting 300,000 to the 200,000 that we have relieved or claimed as capital allowance previously on that same asset. I hope you are good now. My network seems to be lagging, but I think we are good, right? Okay, thank you, Blessing. Thank you. Awa. Let's move, please.
Yes.
So capital allowance incurred in generating tax exempt income is not deductible from accessible profits arising from the income not exempt from tax. That's the problem with taxation. They cannot use straight English. If they use straight English, will they die? What are they saying here? So we are saying that if you use a particular asset or to generate income that is not taxable or non-taxable income, you use an asset to generate non-taxable income and taxable income. Like, see this one. See this here. So you have used the assets to generate both taxable and non-taxable income. What you need to do is to prorate, because they cannot give you relief on non-taxable income. They are not taxing the income that you use the asset to generate. So which relief are they giving you? Do you get? So you now prorate which part of the asset will be used for tax exempt, no allowance on that one. Which part do we use for what? Taxable income. That's the one that they will grant you allowance on. But this proration will only occur if your non-taxable income constitutes more than 20% of your what? Total income. If it is less, that is, it is not significant, and you just use everything and calculate capital allowance on everything. If it's more than 20%, it's significant and you have to what? Prorate. So now capital allowance incurred by small company are deemed utilized during the period that such companies are tax exempt. What are we saying? Small companies are exempted from paying capital and company income tax. So as long as they are small company and they are not paying company income tax, they are not going to be claiming capital allowance as well. So if they now become big company, let's say, and after a couple of years, they become a big company, we are not going to start from initial allowance from there for them. We are going to start as if they have been collecting capital allowance when they were still small. So let me give a practical example. A particular company, let's say um, ABC Limited, started in 2020 as a small company. 2021, 2020, 2021, wọ́n ṣì ń báyìí. 2022, their turnover exceeds that of a small company and they become what? A large company. If they now want to start claiming capital allowance, as a small company, they cannot claim capital allowance. If they now want to start claiming capital allowance, we're not going to start from year one for them in 2022. It's going to be year three. We will count 2020 as if they collected capital allowance. We will count 2021 as if they collected capital allowance. So 2023 is going to start from year three for them and not year what? Year one. Even though we initially did not give them any capital allowance. I hope we are good. So now those are the conditions for granting what? Capital allowance. So now, what are the rates of capital allowance? This one they will give you in your exam actually. To be at the back of your question paper, but it does not hurt to know the common ones, like all these common ones. Furnitures and fitting, motor vehicle, plant, building. Those ones are the most common in questions. So you might want to know them often. So for building, initial allowance is 10, is 15, annual is 10. All of this one sharp, blah, blah, blah. Don't let us waste time. We're just in law. So I already talked about restriction of capital allowance. Calculations of capital allowance on asset acquired on hire purchase. This one, hire purchase, everybody knows what hire purchase is, right? When you buy asset, it's like you are buying half on credit, right? When you do hire purchase. But the thing about higher purchase price is that it is higher than the normal price. If they are selling the asset 500K and you want to buy an higher purchase, they can sell it for you like around 700,000. Why? Your money, their money that you are tying down, unknowns they're supposed to be making profit on that money if they had invested in something else. So now there's interest that you are wasting their time to pay your money. But if you now want to calculate capital allowance on such an asset, you will not consider the interest element. You have to consider the original cost of the asset. So now, the things that you are going to note if you want to work on what? Higher purchase. I'm just praying for you guys. You should not higher purchase in the exam. Higher purchase capital allowance is very stressful. In fact, it's very, very, even me that I've done it several times, I still sometimes get annoyed and angry whenever I'm doing it. So I'm hoping to God that this thing will not come out for you guys. But we're going to have an example that is on it, Sha. I have an example that is on it. I put the example there. So let's continue. Number one, identify interest elements and remove the higher purchase price to get the true cost of the asset. Before we talk about this, let's go to our Excel and explain better. So we have capital allowance, higher purchase assets. See, if you don't understand or if you have questions, guys, let me know. You can just raise up your hand or type in the chat box. Okay. You guys, it seems like you are tired. I'm tired too. Let's just push this thing together, eh? Okay, so I was explaining higher purchase price. Higher purchase price contains two elements. I'll use HP for higher purchase. Higher purchase price equals to the cash price plus interest, because of course it's never the same price as the normal cash price if you want to do cash and carry. So now what we are now trying to do in capital allowance is that this interest, and if you do not want it, what we are giving you capital allowance on is on the cash price and not what higher purchase price. Remember in the question, it is higher purchase price that they will give you. And higher purchase price, as it is equal to cash price, higher purchase price is also equals to what? Initial deposit plus total installment page. Ehen. So now, because in the question, they will give you cash price, they'll give you higher purchase price, they will not give you interest. You'll be the one to find it. So it's as simple as just collecting lifetime. Interest equals to higher purchase price minus cash price. Do you get? But this higher purchase price, they will not give you like direct. They will give you They give you like deposits and the installments or how they want to pay the installments. You now be want to add all the installments together plus your deposits to know what your higher purchase is. Then you now bring it into this formula to get your what interest element. Do you get? So now let's do it in a tabular form. What we're trying to say here is that higher purchase price minus cash price equals to interest element. I hope we are good. This is very important because if you did not get that number one, any other thing that you do on it is going to be wrong. Any other thing is going to be wrong. So that's the first thing. You remove the high purchase price from the true cost of the assets. Identify deposit and instrumental payment and their payment dates. Of course, if you want to do number one, this is compulsory because for you to calculate higher purchase price, you'd have to know how much is the deposit initially. Remember, there is no interest on deposit. Let me go and write it in red. No interest on no interest on initial deposit. Let me put exclamation mark. I'll color it red now. So you guys will know that it's very important. It's one of the things that used to confuse people, I guess, because it confuses me as well. I'll not lie to you. But the hack that I usually use for it is that remember that the reason why we are paying interest in the first place is because that we are not paying immediately. It's not a cash and carry transaction. But initial deposit is cash and carry because you are paying it as at that particular time that you guys agreed to sell or buy the goods or the asset. So you are not wasting time. You are not taking time for initial deposit. It's only the instrumental payments that you are taking time on. So it's only those instrumental payments that will contain interest elements. Please, I hope we are good. Do we get that? You cannot see my screen here. It's your network, oh, it's not mine. I'm really sorry about that. This call is reducing. What happened? Are people that tired? I'm at better calculation. We have not started calculation. What's happening? Is it that you guys don't understand or what? Or network? I know network is bad actually. All right, please let's continue. I can see you guys have no questions and it's worrying me. Shall understand? That's the cocoa. Do you guys get everything I've been saying? So, identify the year of assessment and basis period that these payments fall into. So, the instrumental payment might be over a year. Sabi, you might finish paying installments within a year. You might finish it within 2 years, 3 years, 4 years. You don't know the number of years that you are going to use to pay your instrumental payment. It depends on the what contract, what you have agreed upon with the seller of the what asset. So now what you're not going to do is that you have your basis period already. You know your year of assessment. Now you need to know which basis period and year of assessment does all the instrumental payment and deposit fall into. Deposit can fall into 2020 year of assessment. Other instrumental payment can fall into 2021, 2022. You need to like check how many instrumental payments fall in the same year with deposit, how many fall in the next year after deposit. You need to like separate them like that because the number of instrumental payment that fall in a particular year will be the one that will collect capital allowance for that year. I hope we get it. Now for each new installment, treat it like a new asset was purchased and deduct the number of years that has previously enjoyed capital allowance. Now this one, let me just use this illustration because we'll not get it if I don't put an illustration. Now, let's assume installment will take 4 years to complete, right? And mi ì tí gbé sí next one náà kí ló mú tó bọ́ sí next one. And we make 4 installments per year. Each installment is 20,000 minus interest. So it means that for year one, we are going to be considering 20,000 multiplied by 4. Why? We have 4 I'm not supposed to use the same number of years because it can confuse you when you are going back to this thing. Let me make this one 3. Okay, I think that's better. So we have 3 years, but we have 4 installments per year. So that year one will make it be what? 20,000 multiplied by 4 installments, which is equal to how much? 80,000 naira. So it means that in year one we are considering, formula jare. Let me put equal to with this one. Why? Equal to you're equal to down. Oh, think I shall understand. Is equal to 80,000. Year two is still the same thing. 20,000 multiplied by 4, 80,000. Abi? Year three, 20,000 multiplied by 4, 80,000. So now this particular, say, let's say it's a motor vehicle that have 5 years, like the one we have been using before. 5 years useful life, right? So in year one, we are going to do normal initial allowance. Motor is 50, I think 50, 25. Yeah. So initial allowance 50%. Initial allowance 50%. Annual allowance. Let me write it out. Initial allowance. That will be what? 50% of 80,000. Which is what? 40,000. Annual allowance is going to be, don't forget your formula for annual allowance. That will be what? 80,000. Let me put it into brackets. 80,000 minus 40,000 divided by what? You can use economic useful life. Motto is 50, 25. 25 economic useful life will give us what? 4 years. 4 divided by 4. That will be your annual allowance for year one. Year two, no initial allowance because, of course, it's no longer a new asset, 0. Right? But in case of higher purchase, it's still the same asset. You are not buying anything new. But for this 80,000 that just came in, we are going to have initial allowance. And it's going to be the same thing as was there. So now this one is also going to be 40,000. Now annual allowance in this case, we'll now have 2 annual allowance. Old annual allowance, which is, if you do this divided by 4, to give us 10,000, which is will be 10,000 naira. Then the new annual allowance, which we now do costs minus initial allowance divided by, it's supposed to be 4, remember, because motto is 4, and we are treating each new installment as if we bought a new car, right? But instead of 4 years, we'll count this year one that have gone we'll remove it. So it's going to be minus what? Divided by 4 minus 1. Ẹ jọ̀ọ́, ṣé mi ò tí máa sọ Gilbish? I should say that hack again. Which hack? Bye. Blessing. Which one? I cannot recall what you are talking about.
Ma, please, I don't know how did you get the 10,000
For the annual
for the
allowance, Abi.
eh, for the next year?
This one. The answer to this is 10. Let me write it here. It's 10,000. It's one that I came to repeat. This is here. To get this 10,000 is quite simple. The 10,000 is simply tax written down value. The tax written down value, let me write it here. Tax written down value carried down is going to be, how much is the cost? 80,000 naira. How much is initial allowance? 40,000 naira. How much is annual allowance? 10,000 naira. How much do we have left? Sorry. How much do we have left? 30,000 naira. Very simple. Right? So this, if you now follow the second annual allowance formula that I taught you, to get this old annual allowance is simply what? Tax written down value divided by the remaining economic useful life, which is 30,000 naira divided by 3 years. Why? 5 years have gone. Only 5 years, sorry. Year 1 has gone. And we have what? Year 2, 3, and 4 left. Remember that the asset has 4 years. So is this one is year 3 because we're using 3 years to pay for the asset and not 4 years. I don't know if we are getting it. When we treat questions, maybe it's become more clearer. I just want us to, so that when we are treating questions, it will not be too strange.
The 2 years that is remaining, if you divide 2 divided by 30,000, is it not 15,000?
It's not 2 years, so it's 3 years. Maybe this one that you're talking about.
Yes, the 10,000. This for the year 2.
So tax written down value is 30,000 naira.
Yes.
It's not 2 years that remain. The asset life is 4 years. Have you forgotten? I said the asset is, let me write it out. The asset is motto with annual allowance percentage of 25%. Abi? Therefore, economic useful life of motto equals to 100% divided by 25%, which is equal to 4 years. That's how I got the 4 years. You get it?
Yes, I got it.
Mhm.
But the year in your year of assessment, it was only year 1, year 2, year 3 that you stopped.
Because we
No.
are using 3 years to pay for the asset. This is payment of the asset.
Okay. Okay. Okay.
We are,
Thank you.
we are, we are using 3 years to pay for the asset, and we are making 4 installments per year. Remember, we are talking about hire purchase.
Yes.
So
Okay.
after year 1 has gone, we have three years left for the what? For the asset. So in the second annual allowance, we are going to be doing tax written down value, which is 30K, divided by what? 3 years. It should give us 10K.
Okay, I understand now. Thank you.
So you now treat this one that we just, the annual allowance, I'm sorry, the installments that we paid for year 2, we'll treat it as if we bought a new asset. Remember that it's still the same, it's just one motor, but because we are using 3 years to pay for the motor, as we are paying, we are going to be treating the payment as if we are buying new car. That's why we have another initial allowance of 50% here. On norms, assuming we bought his cash price motor straight, it's supposed to have only just one initial allowance now. Just one initial allowance till the end of its useful life. But because it's on hire purchase, every installment that we pay, we'll treat it as if we are buying new car. I don't know if you get. So that's why here we have old annual allowance, which is for this previous year. Then we have new annual allowance, which is for what? This one that we just paid in the second year. Same thing is going to occur in what? In year 3. We are going to have our initial allowance for the installment that we paid in year 3, which is still going to be what? 40,000. Now, old annual allowance, Omawa di méjì. I don't know if you get me. Oh. Now, old annual allowance 1, which is the one from year 1, is going to be what? 10,000 naira. Old annual allowance 2, which is the one from year 2. How will we now get old annual allowance of year 2? It's simple. You need to know the tax written down value of this year 2 payment, which is what? What is the annual initial allowance? 40,000. Let me write it here. Tax written down value. This is going to be so complicated. Okay. So now, for year 2, the new asset is 80,000 naira, which is the new installment. Remove your initial allowance, 40,000 naira. Please, are we together? 80, let me bracket. I don't need to bracket. 80,000 minus 40,000 initial allowance minus what? I had no right answer for this one. What is the answer for this one? Somebody should give me answer. 80,000 minus 40, 40,000. 40,000 divided by 3. What is 40,000 divided by 3? Anybody? Let me use my calculator.
13,333.
It is 333.
14,000 what?
13,333.
I can hardly hear.
13,333.
I can't really hear you. Is it supposed to be, it's 40,000, sorry. 40,000 divided,
13,000.
so I did not put divided by. When this thing is starting to stress me. Okay, 13,333. I was hearing 13,000, but I did not hear what you guys are saying after 13,000. Thank you. All right, so minus this 13,333 minus 13,333, right? Then remember that we have the old one. The old one that has this 10,000 annual allowance. That one too is there. Oh. Plus, carrying value for the old one was what? 30K. That 30K minus the 10,000 that have been moved from the 30K. So, what do we have? I know it's very complicated, honestly. But then I think we should wait till we start the example, because we would have to, how can I say this? Then we'll have, number one, we'll have a real question, like a real question that will follow through. I'm just trying to explain this step so you understand what we mean by treating each new installment as a new asset, and you deduct the number of years. Please, are we together?
Yes, now.
All right. So, but to some extent, do you understand the higher purchase part? I cannot even hear you guys. Network is not doing me well. Okay, so I already talked about unclaimed capital allowance for carrying back for 5 years. I think I already explained that. Now let's start illustration. We have how many illustration? We have 1, 2, 3, 4, 5. I have 5 illustrations here. I cannot do 5 illustration. If you have the material, good. If you have not, if you don't have the material, please pay for it and have access to it. I'm going to solve probably 2 or 3, maximum of 3, minimum of 2. You guys will go and do the remaining. If you have question, you are free to come into my DM. And yes, your class rep helped you to look for question. I forgot to forward it. Oh my god. Question on base of assessment that you guys can practice with. So if you have any question, let me know. Okay. So now let's solve this Dabira Limited. Perfect. Dabira Limited is higher purchase. Okay, please, are you guys with me? Before I start this Dabira Limited, I beg in the name of God. Let me know, just confirm. I don't know how you guys will confirm or whether emoji or kini. Thank you, Lawal. Because this class is almost reduced by 10 people. I don't know whether they are tired. And we are tired together, honestly. Today was very hot at work and I still have to come and get this lesson ready. So please, we need to put our mind together for this number 1 illustration. I don't know why I put higher purchase in number 1. What was I thinking? Dabira Limited. So let me write Dabira Limited illustration. So after the class, I'll drop this on the drive so you guys can have access to this something illustration. So what I will do, because I want us to, I think we should do workings now first. Workings. Okay. Then we'll not do any. We can go company can talk workings. So number 1, we are talking about what Dabira. I don't even know whether it's limited. Dabira Limited. So now let's read question. Dabira Limited on September 1st, 2014. Note the date. September 1st, 2014. Dabira Limited entered into a hire purchase contract with Barry Limited. 10 generators were acquired on hire purchase by Dabira, with 2 million paid as initial deposit on that date. This was followed by 24 equal monthly installments of 200,000 commencing from November 30, 2024. I guess this September that I wrote is 2024 and not 2014. That's a mistake on my part. I'm not being. So the cash price of 10 generators was 5,600,000. Dabira Limited prepares its accounts to June 30 every year. Compute capital allowance for the relevant years of assessment. Please, did we all understand the question? It says that Dabira Limited is buying 10 generators on hire purchase. It did not give us the hire purchase price, but it already gave us what constitutes the hire purchase price. But it gave us the cash price as well. Like we have cash price, we have deposit, and we have installment. So we have what we need. Now let's go. Let's take it one by one. And please follow me. So now the first thing we have here is what? This is not our this is not well working. Shall let me put in this one. I feel like that's not okay. So what was I write? Okay, deposit. Deposit. Let me write in small letter. Deposit. How much did Dabira Limited deposit? 2 million naira. Deposited 2 million. Somebody's hand is up. Matilda. Good evening.
Now, do you mind if you can increase the fund for us for the on the Microsoft? I mean the Excel.
Okay, you can't see it.
Yeah, do you mind if you can increase it a bit?
How's this? Is it better?
Okay, thank you.
All right. So, guys, I was thinking maybe we'll take another question first. Or are you okay with starting with higher purchase? I just feel like higher purchase is too complex to start calculations for capital allowance with you guys, and I'm scared you might think that capital allowance is hard.
Please,
Okay,
let's
let's pick
just start
another
with
one.
it. Too.
Let's pick another question.
Let me see if
Let's
I
start
have
with
some. Why did I compare that question like this? I don't understand. What was I thinking? God. Okay. Commence business. Okay, let us do something simple first, please. Let's do this number 5. So after number 5, you can do capital allowance. At least you would have gotten an idea of what capital allowance constitutes if we do a simple one first. Because for you to even act capital and higher purchase, you need to understand the normal capital allowance. If not, you get confused, and I don't want to confuse you guys, honestly. So let's go for another company, please. So we are doing number 5 now. ABC Limited, I think. So let's delete. Working to be here. We'll do original. Okay. So now let's go back and read ABC. ABC Limited was incorporated on December 7, 2019 with an authorized share capital of 2.5 million. It commenced business on July 1st, 2020. Compute its capital allowance using the following information. The company acquire the following capital expenditure, right? We have the asset that they acquire, the date of purchase, the costs. Now, how do we do this? Number one, you need the what? The year of assessment and basis period. So this is how we are going to do it. You do the first thing first, because you are in working. Let me do it here. You need to know your year of assessment, basis period. Remember our basis period usually take like 3 lines, 1 to 3. Okay. Then instead of writing accessible profit this time around, we are going to be writing assets. So the main aim of this particular working is to, how can I say this? We want to know the year of assessment that each asset fall into. Because to claim your capital allowance, you need to, it's like a matching concept in accounting, right? Matching concept. You match the expenditure used to generate the income against that particular income. So you want to claim the capital allowance used to generate that particular revenue or profits of that particular period against the period profit and not another period. I don't know if the English that I'm Englishing is Englishing in your ears, Sha. But then Coco is that the assets that we bought for 2025 used to generate revenue in 2025. You cannot now go to 2023 and come and be claiming capital allowance in 2023. It's not possible. It's 2025 assets that you are going to 2025 more revenue or profit that you are going to claim capital allowance for. You get matching concepts. Yes, thank you. So that's what we are trying to do here. So now if we go back to the question, this is a what? New business. We are commencing business, which means that I expect that you guys have understand how to compute your year of assessment and base period for a new business. So, ladies and gentlemen, kindly compute your year of assessment and base period for year one and year 2 for ABC Limited. Let me see your answers in the comment section. Quick. I give you like 2 minutes. This is 9:54. 2 minutes. Oh yeah, let me see answers in the comment section. No. Year of assessment and base period. Let me show you the question again. The company commenced business in July 1, 2020, right? So let me know what is the year of assessment for year 1 and the basis period for year 1. Oh yeah, quick. Oh yeah, quick. Alpha, hope you guys have started writing answers. Ah, 2 minutes ó mà ti pé àbí okay 1 minute ni ó ti pé remain 1 minute. Sorry guys, I missed an important information in this question because I have to go and check the notes that I did the solution to like check what was missing. Can somebody tell me what is missing in this question? I thought I corrected it. How come I still have this old one? Okay, so what is missing is that we don't know the year end of the company. The year end is November every year. November every year. November every year. That means I'll have to take this thing down on the drive and put a correct version there. There's no cessation, no, it's commencement. This question is commencement. Commencement. So year end is November every year. Even if it's this only this example that we're going to do tonight, I'm okay. You guys will go and try. I will give you assignments from the questions that are there. I hope you guys have the material. Who will make my correction? I don't think there should be any other mistake in the material. So we'll come back. Then we'll now start with our hire purchase tomorrow. Guys, nobody has written answer. Hey, you guys want to give me that attack? Oh yeah, what is happening? Precious, that's nice. So start this of commencement to the end of the accounting period. Yes. Your year 2 is 80% correct. Check your month. Check your month for year 2. Precious. It's the month that ends that particular year 2 that is fucking your answer up. Oh. Okay. So yes, now you are right. Precious is right. But is Precious the only person that tried this question? Hey, don't be like this, you. Or is it that you guys don't understand the basic period and year of assessment? But we treated questions on this. I will even forward the questions your class rep brought for me. Let me check my phone. He sent me questions. He sent me questions, oh honestly. So is it that you guys don't understand the basis period? Because I said it when we were doing basis period. If you don't understand basis of assessment, a lot of things will give you issue in taxation. Oh. Especially when you move to advanced tax, it's going to be very hard. That's why I spent time explaining basis of assessment to you guys. Now I'm meeting it in capital allowance again. We'll meet it in company income tax because all this capital allowance question that you are seeing that I'm screenshotting, it's on company income tax question. So guys, what do we do? Bye. Is it that you guys don't understand? Should I continue? Okay, Akachuku answered on the what's it called? On the WhatsApp group. But you only wrote for the first year, you not write for the second year. Zainab Lawal. Okay, I will solve and explain. But I'm not happy that just two people attempted the question that I gave. It's very discouraging. If you don't understand base of assessment, I don't know. I honestly don't know how we are going to do future works. Like I spent so many time. I spent so many time on explaining than you guys should not understand. Sha. Okay, so let's continue. Let's continue. Thanks to those who have tried. And the first year of assessment is 2021, like we have explained. The company commenced 1st of what? July 2020. Abi? I'm not supposed to put a comma, sorry, so that you can adjust it to normal dates. Now, the first accounting year end. The accounting year end of this business is what? November every year. So, and the rules for commencement says that from the date of commencement to the what? To the end of the first accounting period. And the first accounting period is 30 November 2020. Now, let us do the second year. Abi, don't let us do the second year. Let's go back to the question. I would like to make this one smaller so we can see it simultaneously. Ah, how do I move this thing? By later they will move. Okay, so what help me with this thing? Okay, I think it's better now. We can see it. So now look at this plant. We have plants. They bought it in 1st July 2020, which means that plants fall into this basis period. Abi, plants fall into the basis period. Same thing, furniture, they bought it in the same day, on the same day. The two of them fall under 2021 year of assessment. Pictures and fittings is still July. Everything is still 2020. You fall under the first one. Now, ladies and gentlemen, motor vehicle, December 2, 2020. Does it fall under 2021 basis period? This last one that is here. Does it fall under 2021 basis period?
No, no, it doesn't fall.
No.
No, because December is not even part of the basis period at all. Thank you for that. December is not part of the basis period at all. That is why I said that I don't want to write second year first. You need to compare from July to November. What assets did they buy? They bought plants, they bought furniture, and they bought fixtures and fittings. So let's write them out. They bought plants, they bought furniture. Is it furniture? No, I don't know. They bought, okay, yes, furniture, furniture, and they bought fixtures and fittings. Now, because we still have assets on ground that we don't know the year of assessment that it falls, we continue our year of assessment. Second rule for the second year of commencement says that the next day after the end of the first accounting period, if today is 30 November 2020, what will be tomorrow's date? That will be what? 1st December 2020. Abi? So the next accounting period, we have established the fact that the accounting period will always be what? November every year. And this one is 2021 because, of course, we have used the only November that we have in 2020. So the next November that we are going to have is going to be what? The following year. Now, if we now go and check our question back, did they buy any asset within this period? Yes, they bought what? Motor vehicle in December too. So yeah, we're not going to write what? Motor vehicle. So the year of assessment for this is what? 2022. Please, I hope we are good. Another thing that I want us to note is that you need to go and check the number of months in your year of assessment, is it a full year, 12 months, or is it more than 12 months? It cannot be more, or less than 12 months. Now let's check. From July to November, how many months, please?
5.
5 months.
5 months.
Five, five
Okay.
months.
I did not count it. You don't tell me 5 months. So 5 months. From December to November, how many months?
12
12.
months.
12 months.
12.
Okay. So now this is very important. Why? Remember that for annual allowance, if the number of months in your base period is not up to 12, what do? You prorate.
Prorate.
So it's important that you know whether the number of months in your base period is up to 12 or not. Are we good? Now that we have established the fact that these assets were gotten in 2021 year of assessment and this one was gotten in 2022 year of assessment, you can now go ahead and compute our what? Compute our capital allowance. We have written ABC Limited. So let's say computation of capital allowance for, let's say, 2021 and 20. What did the question say, sir? Let's take it back. It did not say particular year of assessment. Okay, so let's see the 2022 years of assessment. So now, here we are going to leave space, or let's put year of assessment, and here we'll put all the assets that we have. How many assets do we have? We have 4. So now let's write them one by one. We have plants, we have furniture, we have, let's put this one as F and F. When did
Yeah,
I write
because just asset
F,
quota.
F and F? And the last one is what? Motto.
Oh, okay. We had.
Please, is somebody asking question? Is somebody asking question? Nobody, I guess. So yes. It's about. Okay. So now the next thing we're going to do is write our percentages. What is the percentage for initial allowance? What is percentage for annual allowance? Plans for initial allowance is 50%. 50%. For this one is 25%. Let me go and show you where to see it. Let's go back up. Here it is. So this is where you will check it. Do you get? Plant excluding furniture and fitting 50-25. Motor vehicle 50-25. Furniture and fitting 25-20. Motor, where is motor? Okay, I've said motor is there. Do you get it? That's where you go and check it. But like I said, the simple ones, you should know them. Please don't wait to go and be checking the back. But if you are confused, don't do shakara. I mean, don't form big boy inside the exam. Go and check it. Nobody is coming to check whether you check at the back of your notebook or not. So yes, that is it. Now let's compute. 2021 year of assessment. How many assets did we buy? We bought plants, furniture, and fittings. So let's talk about their cost. Go back to the question. What is the cost of what? The first one, plants. 2,480,000. Yeah, write it there. 2,480,000. Let me put this thing in figures so we can. Okay, this one will be easy like that. That's the cost of plant. Furniture 520,000. Pictures 650,000. This one we don't have it yet, right? Now initial allowance. For initial allowance plant is 50%. What is 50% of this particular money? 1,240. That should be 50%. What is 25% of 520? That will be what? 0.25 multiplied by 520. 130,000. 130,000. What is 25% of 650? 0.25 multiplied by 650. 162,500. 162,500. Now, your total, this total figure is only for capital allowance, so it's not for your cost. Don't go and total your cost. Any figure that is coming to total is related to capital allowance. So now this one will be equals to this plus this plus this. Enter. I hope we're all good. Now, annual allowance. For annual allowance, remember our formula. Annual allowance. Annual allowance. So we are taking it one by one. For plants, what is cost? The cost of the plant is 2,000 what? 480. Let me just write it. 480 minus initial allowance 1,240. Abi? I want to complete it here. Then multiply by, what is the annual allowance percentage of plants? 25%. 25%. Please, I hope this thing is not confusing anybody. So what will be the answer? This one is going to be, if you do 2,480 minus 1,240, it will still give you 1,240. Then you multiply that one by 0.25. 310,000. So we have 300 is it 10 that I just saw? 310. I'm not simple. 310,000. So this is the answer. But if you now want to know the economic useful life of plants, what do we do? Equals to 100% divided by what? 25%. What do we have? That's 4 years. So you can also use the second formula. You should get the same answer, right? So for plants, annual allowance is what? 310,000. These ones, they are negative figure. We are deducting, like we are removing from our costs. Negative figure.
Ma,
Yeah, I can hear you.
so please, you did not consider the 5 months, the proration for the annual
Oh,
allowance.
thank
Because
you
it's
for reminding me. So now that means that we are going to be multiplying this one by 5/12. How do I write this thing that it will not? 5 divided by 12. Let's take it back. Let's program it to Excel now. Okay, it's calculating for me. Mi ìfẹ́ kó bá mi calculate àbí báwo la ṣe máa ṣe báyìí. Oh, this thing is stressing me. Maybe I should write it together with this one. equals to, but it will go and
is
calculate
one
it.
is 129,166.6.
Yes, I'm trying to write that. Let me just write it.
Okay.
5 months over 12 months. I think this one should stay. So our answer would not be what? That would be 310,000 multiplied by, open your bracket. So it's not being 5 divided by 12. 129,167. So answer here is going to be 129,167. And this is what we are going to have here, equals to this answer. Now go to the equal to and put minus, because remember is a negative. Inside our notes, this total figure is not supposed to have bracket though, but because we added it up, that's why it has brackets. Please, do we get the annual allowance? Do we have any question? Do we have any question? So now let's move to
The example, we are going to write this allowance. Is it like a workplace? It's supposed to know how.
I don't get your question, please.
Okay, like during the exam, I'm assignment for annual allowance is it to be on the same line. So it's like workings.
No, it cannot be on the same line. No, you will leave space for your original calculation, maybe like a page or 2 pages. Then you now do workings like after it. So as you are working, you go back and be writing it in your original front page. Do you get it?
Yes, man. Thank you.
All right. So for furniture now, we are going to be following the same format. The cost of furniture 520,000 minus 130,000 multiplied by 20%, because furniture is 20%, right? And what would that give us? 520 minus 130, 390 multiplied by 0.20. That's 78,000 now. 78,000 multiplied by 5 months over 12 months. What do we have then? Multiplied by 5 divided by 12.
32,500.
32,500. So we bring it here, equals to minus 32,500. So now if you want to get economic useful life of furniture, what do you do? 100% divided by 20%, which is equal to how many years? 5 years. Are we good? Now for furnitures and fitting, I'll be fixtures and fitting, we are going to be having 650,000 minus 162,500 multiplied by how many percent? 20%. Now what do we have? 650 minus 162.5, that's 45, multiplied by 0.20, 97,500. So we have 97,500 multiplied by 5 months over 12 months. So now let's go back, multiply by 5 divided by 12. 40,625. 40,625. So here we have equals to minus this. Why do we have a, okay, sorry. All right. So same thing as here equals to this value. I'm not pushing. Okay. So now this to be our total allowance. What we are looking for that we are going to be using in our income tax computation is this. Let me put final kini. Yeah, this is what we will use as capital allowance. We now have what is called tax written down value. Tax written down value carried down. That is the one that we take to the what? To the following year of assessment. I will not do furniture and fitting, but it's the same thing as this one, sha. So let's copy. So this one is simple. Equals to this one plus this one. I'm using plus because no, we already put minus in the formula. We are supposed to minus, so we just drag actually to do it for us. So that's it, tax written down value. Now year two, we are talking about 2022 year of assessment. Did we buy any new asset? Yes, we bought motor vehicle. So now cost of motor vehicle, hello Lara, motor vehicle, let's go back to our question. 2,400,000. 2,400,000. Motor vehicle is the only new asset that we have. So initial allowance. How many percent is initial allowance? 50%. That will be 1,200,000. I'm not supposed to put 1,200,000. And because is a negative, we put minus. And this one is going to be equal to this one. It's the only one that we have. So now let's talk about annual allowance. For the previous asset, what did I say we are going to use to calculate the annual allowance? Remember, we now have a whole 12 months. So the annual allowance for second year is now going to be annual allowance is now going to be what? Tax written down value divided by the remaining economic useful life, which is the reason why we have been calculating economic useful life. That's why I've been calculating it. So you can use this for second year. So now, for plants, annual allowance for plants will now be what? 1,110,833 divided by, I don't know how I divided by now without.
We are doing motor. We are doing motor, not plant.
We are doing what?
Motor for the year two, right?
No, for annual allowance, we start from plants again now. We are doing everything. We are starting from plants. The reason why we did not touch, let me enter here. This one is 0, 0, 0, because we did not buy anything. So now annual allowance, we are starting from plants. We will now move downwards. Do you get it? So plants will have annual allowance for year 2, and that's what we want to calculate. So annual allowance is that particular figure. So divided by the remaining economic useful life. This plant now is 4 years. Though it has used 5 months, we'll consider the 5 months as a whole year. Some people used to count the month, but personally, I don't count the months, and my answers usually correspond with answers in the past question. So now we assume that a whole year has gone because the year of assessment is no longer there. So that will be what? 4 minus 1. Abi? Or we can just write 3 straight. Well, let me write 3 straight. Hey, I'm in trouble. What is wrong with this thing? Now it's stressing me. Sure, I cannot write 3 in face. Bye. So divided by 3. So this one will be equals to, let me write it down here. So now let's calculate. Please, I hope you understand this thing. We have
Yes, we are following.
10,833 divided by 3. So 370,278. 370,278. So that will be our tax, our annual allowance for what? Equals to minus this figure. Okay. Do you see why? Do you now see why I don't want to start with higher purchase, guys? Imagine we have started with higher purchase. In fact, I don't want to imagine. Even though this class have like even reduced to more than half, but no problem. Let's shall finish this one that we are doing. Okay, so this is this, right? So let's do for furniture. We repeat the same thing for furniture. Furniture. So how much is furniture tax down value? 375,500 divided by what is how many years does furniture have initially? 5 years. 1 year is gone. We have 4. Abi. So what do we have? 357,500 divided by 4. 89,375. 89,375. So that's it for furniture minus this. So now we do F and F. So for F and F, tax down value is 446,875. 446,875 divided by what? How many years is this one? 5 years, 2 minus 1 year, 4 year. So 446,875 divided by 4. 111,719. I would like to approximate 111,719, which is what we are going to have here, equals to minus this figure. Now for motto, remember that motto is new. Motto is new. So we are going to be using what? Cost minus initial allowance. Cost minus initial allowance. Ti gbé mi lọ. Ti gbé mi lọ bí tí mi ò mọ̀. Níranù. Minus initial allowance multiplied by annual allowance percentage. Abi? So the cost of motor vehicle is what? 2,400,000 minus 1,200,000 bracket it multiplied by what is the annual allowance per? I think that's 25%. Yeah, 25%. And the answer should be how much? Let me try the cost. That will be 1,200 multiplied by 0.25, 300,000. Remember that in this case, motor vehicle is 12 months as a whole. So we are leaving this 300,000 without prorating. Now, total capital allowance for this period is this. So it means that I think I use this one. Yeah. This is our total capital allowance for 2022 year of assessment. To get our tax written down value carried down to the following year, what do we do? Equals to what we have here minus this. Drag it. So this one is going to be equals to this plus this plus this. Remember, it is plus because these ones are in bracket and is Excel. Normally it's supposed to be minus minus. We are minusing the stuff. Please, are we good? And that's it. You are finished. So this is the answer to your question. This one that I bolded are the answer to your question, and this is the answer. That is it. Any question? I'm going to be uploading the stuff. Ambali Samuel, your hand is up.
Sorry, ma. Please, in that task written down value, the thing
Yes.
added, not subtracting, because the
We
value.
are subtracting it because we are adding it because of the formula. In the Excel, we have already put minus before.
Yes,
In normal book, we is minus. So
yes, but here in this place now is increasing. The one for the one for motor vehicle is increasing because the value here is 1,481. It's supposed to be lesser than 1,481.
like your own taxi down value.
Yes, for plants.
Are you doing it
Plants.
on Excel or normal on your book?
No, I'm following with what you did here because the thing is the when you subtract 1,000,000, 1.1 million naira. When you subtract 376 plus 1.1 million naira, it's supposed to give us like nine something or 800,000. But yeah, we're having 1 million plus.
Oh, sorry. Yeah, I get you.
Okay.
Thank you
Uh,
for. I never observed that actually. Thank
okay.
you. I'm
Thank
I'm tired and hungry too,
you.
honestly.
Sorry.
Oh,
Okay, thank you for observing that. So
Yes,
I
ma'am.
think we understand? Ambali Samuel.
Yes, I understand, ma'am. Thank you.
All right, your hand is up. That's why I called your name.
I want to put it down.
Put it down. All right. So I guess we are going to see tomorrow, and I'll upload this stuff to the. I'll upload it because I know a lot of people need to watch this thing again. I'm going to check it again. And tomorrow, maybe we'll take something simple again before we take higher purchase because I know half of the people that started with us did not finish with us. So higher purchase can be very daunting. So I don't want us to take it first at all. All right. So I guess this is where we call it a day. I would see you guys later. That will be tomorrow. Thank you very much. I think I can stop presenting now.